Welcome to the first Plato reporting season update for 2026. Over the next few weeks, we're going to be looking at some of the big results for income investors across this February reporting season. On with Dr. Peter Gardner, Senior Portfolio Manager of the Plato Australian Shares Income Fund. Peter, let's start with CBA. They reported just a few hours ago it was a huge half-yearly profit result. What was in it for income investors?
Yeah, so CBA has been an interesting one in the recent period. Its last two results have actually been a little bit disappointing, and we've seen its share price come back from $190 a share down to $150 a share. But you're right, this was the one that changed it. It was a really strong result from CBA. They announced a $5.4 billion profit, which was up 6% on last year and 2 to 3% above expectations. The share price has responded really well. It's up about 8% when I left my desk. So a very strong result. Its dividends were up 4%, which equates to a 4.5% annual yield. So its yield is starting to get back up there towards market levels. Its payout ratio was 74%. Its net interest margin, while falling 4 basis points, was still really strong. Its bad debts were really the strong part of its result. The home loans are growing. We've seen interest rate cuts last year, so home loans have started to grow and bad debts have fallen as well. And so that allowed it to deliver an increase in profits, and we'll see what the other banks deliver along with that. It's still funding a huge level of its loans with deposits at 79%. And so overall, it was a really strong result from CBA. Now, I'll take you into one of CBA's slides that they come up with because we love showing this slide each year because it gives a great indication of how the overall economy is growing. And it breaks it down spending by age group. So you can see on this slide, the left-hand side shows you the spending by age cohorts breaking up into essentials versus discretionary. And so you can see on the kind of top bars that the younger age group has been spending 6.7% extra on essentials this year versus last year, and still increasing their spending on discretionary as well. So younger people are starting to do a lot better. They were struggling as interest rates got raised, but they're suddenly doing a lot better as interest rates have been cut. And older age groups are still growing their spending well as well. So their spending in essentials increased by around 4%, and their spending on discretionaries was actually even better than the younger age groups. And so we can now see that spending is actually doing pretty well across the overall economy. And we've seen that, you can see in the middle slide, in the household demand is now driving GDP growth. And so those interest rate cuts did what the RBA wanted them to do. They've improved GDP spending. But inflation is obviously the worry, and that's one of the things impacting the younger age groups and potentially why their spending has increased more in essentials versus discretionaries. That on the right-hand side, you can see what's impacting CPI, and you can actually see that housing, food, and recreation and culture are the three biggest drivers of the increase in CPI, and that younger people generally drive a lot of that kind of increase. So inflation's been a problem. The RBA's had to increase interest rates by 25 basis points, so we'll see what happens to spending going forward.
Yeah. And another big one in today was the AGL result. What's your take?
Yeah, so the AGL result has been a stock that's been struggling for the last few years. We obviously know that it's having to shut down its coal-fired power plants and invest more in batteries and things like that. But in this result, while we did see profits drop 6%, it was actually well above market expectations and the stock prices responded well. It's a stock that we've kind of bought in for its dividend in this period because its dividend is trading on an annual yield of 7.7%, so very strong, and its dividend fell 4%, but was still better than market expectations. Its target payout ratio is only paying out about 50% of its earnings, and the reason it's doing that is because it's investing a lot in investing in new batteries. And so you can see those battery earnings, while still very low in comparison with its overall profits, they did increase by about 30% last year, increasing from 25 million to 35 million, and we'll expect that to continue going forward as it's installing a lot of large batteries that will hopefully help out with the renewables that are coming through and make up for the loss of coal-fired power plants as they close down.
Yeah. And finally, Pete, Evolution Mining, it's a gold miner. Gold miners have been on a tear. Has it delivered a payday for income investors?
It sure has. Yeah, gold demand is still very high. Whenever I walk past Martin Place in Sydney, I see a huge lineup for people trying to buy gold. So gold's definitely in demand in retail land, and it is on the stock market as well with these gold miners Their share prices are up over 100% in the case of Evolution Mining. And that's because its underlying profit was up over 100% that you can see in this result, and it increased its dividends by 186%. Still, its yield still isn't super high on 3%, its annual gross yield at the moment, but that's increased massively on last year. And the thing that investors really liked about the Evolution results is that there had been a view in the market that it was kind of X-growth, that it wasn't going to be able to grow its portfolio. But the reason it's not paying out even more than it's earning at the moment is that it's actually investing quite a lot in new mines. And so over the next 4 years, they're expecting to spend about $1 billion investing in new mines, so expecting those profits. And all those new mines are extremely profitable at current gold prices. And so we're expecting its profits to grow into the future. So this is something that you wouldn't normally expect an income manager to hold, but we've loved it for its total return, and now it's delivering on the income as well.
Thanks, Pete. That's good news for Plato investors. And I look forward to your dividend insights over the remainder of this February reporting season. For anyone who would like more information about the Plato Australian Shares Income Fund, go to plato.com.au or send us an email at distribution@pinnacleinvestment.com.